Good evening. We're going to do a quick review of the U.S. initial jobless claim and continuing jobless claims report that came out and release that came out today at 8:30 a.m. Eastern Standard Time. What we have in front of us here is the abbreviated trade plan. You want to take a few seconds to read this. It tells us what the initial jobless claim and continuing jobless claims information is about. One highlight here is caution, what those in the know say. Here's what we'll be looking at the trade and the charts that we'll be looking at to confirm this trade. The US dollar movement is a reversal trade, and we'll see that as we begin to look at the charts. Here in front of us we have the US dollar chart from this morning, January 3rd. And the release came out at 8:30 Eastern Standard Time, and it drove the US dollar down just below the 21 simple moving average. Trade plan is based on a reversal of the movement of the US dollar. So the movement was down below. The reversal would be when the US dollar crosses up, we would then buy the US dollar / sell the Euro USD. So this took place at 9:50. If you look at the chart closely here, I believe 9:45 was actually a cross and close. So at that point is when you would sell the Euro USD. Let's take a look at that chart and see how this trade transpired. Here we have the Euro USD chart in front of us for this morning. And I've already drawn the lines here, and I'll relate to those in a second. If you recall, a few seconds ago, we just looked at the US dollar chart, and we had noted that at 9:45, 9:50, that the US dollar had crossed above and closed above the 21 simple moving average. And the trade plan, that's what it called for, the reversal. So we would have entered at about this point. And there's we drew the line here so we can reference that as we move forward. Now, being a smart trader, we knew that at 2 o'clock in the afternoon, the FOMC meeting minutes were going to be released. And it's definitely going to have an impact on the US dollar. So, had we entered the trade based purely on the US initial jobless claims at 9:45, 9:50, we were really in no pain at all as we moved this trade. Yeah, it wasn't anything that was going anywhere, but it was pretty much painless. So as we approach this FOMC release, the question becomes, what do? Do you exit this trade with a few pip loss or a break-even point, or do you bring your stop down and see if you can take advantage of the FOMC? Again, there's some risk involved there. But if you entered a trade based on the U.S. initial jobless claims, you may decide, I'm going to stay in this trade and I'm going to bring my stop down and protect and minimize my risk, protect my capital. So you would have maybe dropped 8, 9, 10 pips as you brought your stop down to this point. You're saying, if it breaks above this, I want to exit this trade. Here we entered the trade, and we were able then to take advantage of the increase in price value of the US dollar and the euro dropping in value based on the FOMC release. Now, Huskins and I talked earlier today purely about the FOMC release and what the trade would be on that. And we're going to start to look at that in the future as we go forward. In this particular case, prior to this happening, we talked about it being nothing more than a continuation trade, as the first candle released on this was right here, and it dropped 10, 12 pips very quick, and at that point you would enter this trade selling here from a continuation standpoint. Would have been still a very nice trade. So either way, entering based on the U.S. initial jobless claims report on the reversal at this point, and selling the Euro USD, protecting your capital, minimizing your risk, staying in the trade, taking advantage of the FOMC release was also a great trade. So just some things to be aware of. Sometimes you need to really hang on to some trades and look at what's going to be coming up in the very near future. Bring your stop down so that any loss occurs, it becomes minimal, and take advantage of the movement based on the FOMC. Hope this helps you in your Forex trading, and I hope to speak to you soon.